Well, State Bank of India declared its quarter 2 numbers just before Diwali on the last trading session, 3rd of November. And the numbers look quite good when you look at it overall. So we'll take a quick look at how brokerages have responded to these numbers. What have they done to their target prices? And most of them have upped their target price. So let's have a look at 3 of the brokerages. Morgan Stanley continues to maintain an overweight on the bank with a target price of 680 rupees a share. It believes that SBI is well positioned for around a 15% return on equity going forward. Q2 FY22 numbers were strong with good, strong asset quality. Mind you, in terms of asset quality, the bank demonstrated that GNPAs fell by almost 42 basis points when you look at it sequentially, and even net NPAs fell 25 basis points to 1.52% sequentially. Both of those numbers are probably the strongest in the sector as a whole when you look at large banks. When you compare them to the large private banking space, these are the best numbers. And even in terms of margins, what Morgan Stanley believes is that SBI will continue to improve its margins. NIMs came in at around 3.24% for the bank. It also says that as the macro cycle turns, that will continue to uplift earnings and will continue to aid State Bank of India going forward. It says that provisions will continue to undershoot more often, and PPOP growth will continue to accelerate for the bank as both the growth as well as the rate cycle turns up for the bank. And what is really telling is also the ROAs. Mind you, SBI showed an 18 bips year-on-year increase in terms of ROAs. So it's coming at around 0.6% or 0.61% odd in the current quarter, in quarter 2. And Morgan Stanley expects that to go up to 0.9%. So a considerable upgrade even in terms of the ROAs, which will lead to a re-rating according to Morgan Stanley. When you look at CLSA, the views are pretty much similar. It continues to maintain a buy where the target price is up to rupees 750 a share. ROEs are expected to come in at 15%. Slippages are expected to come down with credit costs starting to undershoot already, according to CLSA's projections. And ROEs will comfortably exceed the 15%, wherein CLSA continues to reiterate a buy on the stock. Let's also look at Credit Suisse. Credit Suisse also believes that the stock will outperform. The target is up to around 620 rupees a share. It believes or it assesses that the Q2 overall performance was strong. Loan growth was modest. However, asset quality trends remain strong, and of course a contraction in wholesale book, but again management commentary seems to suggest that wholesale will grow in quarters to come as growth picks up and the capex cycle turns a corner for the country as a whole. CS also believes, which is Credit Suisse also believes, that capital levels are adequate at the moment. So SBI seems well capitalized, 30% plus in terms of their capital adequacy ratio at the end of quarter 2. Overall, brokerages seem quite bullish on SBI, and in fact, CLSA has an overweight, or rather has a buy, but Morgan Stanley has an overweight on State Bank of India. Good set of numbers from the bank and good commentary even from brokerages to match that.